Welcome back. Now, the past financial year has been a solid one for Sirius Real Estate. 21 consecutive dividend payouts there, and this despite the macroeconomic environment and the geopolitical volatility. Visiting from the UK, company CEO Andrew Coombs joins us in studio to talk all things real estate and how the current economic environment is treating the industry. Andrew, always a pleasure. Good afternoon.
Hello there, and thank you very much indeed for having me on this afternoon.
Absolutely. I mean, I would have mentioned the intro, quite a few milestones for Sirius at this time. Let's talk about that, the dividend and the progression with it, but also 10 years of the JSE.
You're right.
Yeah.
Sirius was the first fast-track listing back in December 2024, sponsored by PSG Capital. So, we're delighted that we're coming to, our 10-year anniversary. We listed at R4.50. Today, I think the share price is close to 24 Rand, and in that time, shareholders have received 21 consecutive increasing dividends, all of which have been at least 1.4 times covered by earnings.
It's wonderful, and of course, this last reporting period, Andrew, also still speaks of quite a strong showing from the company.
Absolutely. So we increased funds from operations by nearly 7%. But what I always kind of like to look at is that period just before COVID, so to March 2020, when we were achieving just over 1.1 billion Rand of FFO. If I look at the period we're reporting on now, March 24, so 4 years on, we're generating 2.2 billion Rand. So 110 million euros of FFO. Who would have thought that in a period where you saw interest rate rises, you saw the Ukraine situation, you saw COVID, and of course you saw the gas crisis in Germany, that we would have been able to double our FFO in that period. And of course that's really important because we pay 65% of our FFO out to dividend or out as dividend. So what that means is that FFO increase is of course driving the 21 consecutive increasing dividends that we've now paid to shareholders.
I want to speak about the quality of the assets within your portfolio at this point, Andrew. We know there's been quite a bit of capital recycling, some acquisitions, some disposals, and of course that all leading to that very positive growth in FFO.
So in the period we recycled 60 million euros of assets at a 5% premium to book value. About 2/3 of that was recycling of assets to people who intend to develop those assets as data centres. So, that's a new market for us. But we took that capital together with the capital that we raised in the UK and here in South Africa in November of last year. And we've used that to purchase nearly 200 million euros of new property. So some of that in the UK, for example, the asset in Gloucester, which we bought for £33 per square foot. That's against an average value within our UK portfolio of £90 per square foot. But also assets in Dresden, in Germany, that we purchased on a 16% running yield. So what we're seeing here is assets like that we believe are once in a cycle opportunities, and we're delighted to be able to access the capital to go on and own and develop those assets.
A question I ask you every time we chat, Germany and the UK, still your areas of focus there? Any other places where you might be seeing some growth opportunities, maybe even with those data centres?
No, we think Germany and the UK gives us plenty to be getting on with. The thing now is not to be distracted. We've got a 10-year track record of delivering, good returns back to shareholders. We've got real opportunities at this point in the cycle in the marketplace. We need to stick at what we're good at and keep doing it and maintain our discipline.
Of course, Andrew, you've mentioned this, and cost of capital, that's starting to look a little cheaper in Europe, not so much in the UK for now. I think they might cut pretty soon. Let's talk about that and how you envision just cheaper capital might contribute to Sirius at this point. So
our average cost of debt at the moment is 2.1%, and we were delighted to see the ECB lower from 4% to 3.75% on Thursday of last week. All of our debt is in euros, and it's all against the German business. 70% of it is corporate debt, so it's really, really good to see that coming down. Now, our business model is not dependent on it. But we are going to face, over the next 4 years, a change from our current cost of debt of 2.1 to an increased cost of debt. It remains to be seen what that would be. But we are very encouraged to see rates in Europe come down from 4% to 3.75% as a first step.
I also want to speak about just global economic sentiments here. What we are seeing is a bit of a mixed one all over the world, specifically maybe taking a look at Europe. It's not necessarily an even picture. And I'm wondering how that does play into valuations. So I think it's an important part as well of how we look at Sirius.
Well, there's a lot of change. I mean, you're experiencing change in South Africa, and may I say, setting a fantastic example to the rest of the world. We've had the stuff in France over the last few days. UK, as we know, is an election on July the 4th. We're seeing a lot of these governments pull snap elections much closer and more quickly than we would maybe initially have expected. And of course, Germany's government is due to play out until November of next year. Who knows, maybe you might see an early election in Germany, possibly not in 24, but maybe in 25. I think markets like certainty, and I think the issue is that, you know, there's a lot of political uncertainty. And I think it'll be interesting to see how that plays out. But I think the market will prefer to see more certainty in 25. That will lead to, I think, better rates and better conclusions than the uncertainty we're facing at the moment.
And Andrew, let's also talk about just the listing on the JSE, of course, that reaching a milestone. Any thoughts of listing anywhere else, secondary listings? Is this still the place to be?
I think so. We're really proud of our South African heritage. You know, we find that when we come to South Africa and talk to investors, they're particularly savvy, particularly knowledgeable investors. You know, we really like being in both of those markets, and you know, we're looking forward to in some way doing something maybe at the JSE in January of next year to celebrate that 10-year point.
Lovely. Well, it's a pleasure having you here in studio and having you in South Africa, Andrew. Thank you for being here today. That was Andrew Coombs, CEO of Sirius Real Estate.